Hello, folks. Welcome to the Weekend Investing Daily Bite. Today is 4th of November 2025. Definitely not a day to remember for the markets. There was fierce selling all across the counters. Almost all the benchmark indices losing around half a percent, more than half a percent, some of the indices, of course. And almost all the sectors completely washed down today. And Nifty on the back of some fierce selling in some of the tech stocks, auto stocks. We will see that when we discuss the heat maps. But the crucial point in discussion is that Nifty has broken a very important support that it had been holding on to for quite some time now. So we'll discuss that as we go to the Nifty daily chart. But the global context is something I wanted to quickly share with you. So we've been hearing about some of the narratives that have been building very consistently about whether there is going to be a potential bubble due to AI stocks or not. Right. So we discussed a very interesting story last week about it. If you want to go and check it out, please do watch that video. We'll try to give a link of that in the description. But whether the current setup is very similar to some of the past, when the dot-com bubble that we saw back in 2000. So we try to draw some parallels to that and give you some context. But that is exactly what we also have as a quick insight today, later in the later part of today's episode. Just a small insight that I wanted to share in terms of how the rate cuts, what is the insight we can get out of the number of rate cuts we've observed in the last 24 months on a cumulative basis. So very sharp insight. Do take a look at that as well. But yeah, the overall sentiment has been quite negative as of now. I mean, the headwinds are definitely overpowering the tailwinds of the markets, and also not, no news coming in from the trade war perspective is also kind of, there's not much of positive news that we have at this point in time, due to which the sentiment remains sluggish. So that's the context I wanted to share. And of course, the FIs have had their fourth consecutive selling session, and the trajectory was flattish for some time, but now again it looks like FIs have started to sell once again. And we'll see how that progress is going forward, whether that can reverse or stay as it is, or move upwards. And as far as the positive news is concerned, I think we have a good sort of very important announcement from NSE regarding the introduction of pre-open session. So basically for the FNO segment. So it is primarily aimed at sort of yielding better price discoverability and also reducing the volatility at start. So that has been one of the major pain points for a very long period of time. The volatility that the markets usually observe early on, in the first 15-20 minutes. So let's see if that can, if this entire arrangement, this is going to go live from December first week, 8th, if I'm not wrong. Let's see if this can have any positive impact. If that can happen, then it is good news for all of us. There'll be narratives coming in, of course. We'll try to see how we can discuss all of that in the future. Moving on, of course, this disclaimer, please do read the disclaimer before you proceed any further in this video. And also, a very important message, if you've been liking our videos, if you've been enjoying our videos, if you've managed to get even a very, very small insight that has helped you in any positive way, please do consider subscribing, because, our team has come out with this metric that almost half of the people that view our channel are not yet subscribed to the channel. So we don't have any intention to apply a commercial layer on top of this channel. So we don't intend to uh, uh, charge you for any of this content. So subscription and comments give us a lot of sort of enthusiasm, and also motivation to come out with even stronger content in the future. It's a quick plug I wanted to insert. Moving on, where's the market headed? Nifty, as you can see, down 0.64%. So this is the support I was talking about yesterday. So this support around 25,700 was very, very critical for the markets. In fact, we broke below this support and also tried to stay above the support as the markets progressed yesterday. But today, as you can see, markets opened around, basically the body of yesterday's candle, and from there onwards, I think it has been a downward slump for the markets. And as of now, the markets have also not only gone below the 25,700 mark. In fact, we've also dropped below the 25,600 mark, and it does look like maybe there is a potential chance that Nifty might come back and find some support around the 40 period moving average that we've been tracking. So as of now, there seems to be a little bit of a reversal that Nifty might be observing. But of course, yes, I mean, this resistance also is an important sort of level that one would want to watch out for as far as support is concerned. So this could be an important support going forward, 25 400. If we don't get any positive cues, we might find ourselves in a situation where the markets could consolidate furthermore going forward. Moving on, Nifty Next 50 index is also down about 0.45%. So there's been a lot of volatility in the Nifty Next 50 index, and in fact, this resistance kind of proved to be very strong for the index. So the mid cap index is down 0.36%. So the mid caps and the lower caps are not sort of hit as badly, when you compare it, with the larger cap indices, 0.36% down. And in fact, looking the chart is looking better compared to some of the other indices. And small cap index, if you see, is down 0.6%, in line with Nifty, I would say, but still, we are still very very close to this support here at 17,300. So as far as this can be held on to, I think we are quite okay. Uh, Moving on to the Bank Nifty index, down 0.47%. So as we discussed yesterday, there's been some choppiness observed around this area. So once this, we can see there is a potential sort of congestion zone that we've managed to observe here. So once we get a break on the upside, maybe there can be good amount of traction for Bank Nifty as well. Moving on to gold. Gold is down 0.32%. Nothing much to discuss on the gold front, though we have a very important insight towards the end of this episode. Do watch that. So silver is down 1.3%. Of course, we have discussed how silver usually is quite volatile and much more volatile than gold. We've done several videos on that as well. Please do have a look. And moving on to the advanced decline trends, of course, the declines overpowered the advances. 366 declines compared to only 134 advances. This kind of, it opened in a neutral manner and further kind of aggravated as the day progressed. uh, and then coming to the heat maps, complete red, a sea of red is what we can see. And of course we can see a little bit of green here and there. Bharti Airtel, Titan, SBI, Bajaj Finance, and some of these counters have exhibited some green. Mahindra and Mahindra is also in green, but look at the kind of red that we can see here. TCS, Zomato, Eternal, basically down 2.8%, TCS down 0.8%. So tech stocks have witnessed massive bleeding. Infosys down 1.18%, Wipro down 1.07%. And across these counters as well, Coal India, ONGC, all of them down, beaten down completely hard today in the markets. Moving on to the Nifty Next 50 index, LIC, of course, maximum weighted, losing about 1.54%. And we can see complete red over here, and in between here and there we can see some green pockets like IOC, BPCL, DMart, ICICI, Bosch, Cholamandalam Finance, Adani Power. So some of the other Adani pockets also, returning a mixed number today. Moving further to the movers of the day, we have 3M India. So 3M India share price has skyrocketed 17%. The Q2 results have been very, very positive. So 16.8% gain on 3M India. Fantastic sort of performance here. As you can see, massive gap up followed by a very, very strong green candle. So this always is very, very positive as far as the short-term momentum for stocks are concerned. And moving forward to sectoral trends, what we can see, complete red, completely down. I mean, so the charts ideally should have been in red, but pardon us for that. This is the feature of this particular software. But the relatively best performing sector was MNC today at, just completely flat. Some of the other sectors which are flat, which demonstrates the relative strength of sectors as well. So PSU banks have been very strong, as we've discussed, did not go through a major slump today, 0.1% down, along with the India tourism, which is down 0.2%. And we can see how some of these sectors like CPSC, capital markets index, the India defense index, Nifty metal, all down completely, completely beaten down. In fact, all these pockets, IT, PSC, down more than a percent. Moving forward, the stock, of course, CPSC was the worst performing sector. I mean, worst performing sector today, down about 1.7%. Some of the stocks were Power Grid Corporation, NBCC, Coal India, ONGC, all contributing to major losses in the sector. And in fact, it is exactly at the 40-day moving average that we usually track. And if there is a break on the downside, then it could prove to be a longer sort of painful period continuing for the sector. Moving on, so India defense is one more sector we've shared. Again, there is this formation of a congestion zone here. So if there is a breakout on either sides, we can see a good trend coming along. So the US market perspective is also here for you to observe. The Nasdaq was okayish today. I mean, US observed a mixed day last night, and in fact, from a 1 week return standpoint, it has been completely negative, as we can see here. So the S&P 500 down 0.56%. Small caps have been very, very negative. In fact, we've discussed how some of the heavyweights have been dominating the performance of US markets, and if those stocks also start to turn negative, then that can have a ripple effect across other markets as well. So the sentiment, if the sentiment, so that is the power of sentiment. If it topples, then it can have a massive impact all across the globe, because US is the mother market, and there will be a shadow effect across all the other markets as well. Moving on, so Amazon did well, managed to do well yesterday, 4%. In fact, some of the best performers were Amazon, Eli Lilly, Palantir, Tesla, Nvidia, all performing quite well. So the final segment is a quick insight that I wanted to share today. So just take a look at this chart. So this is from Bank of America Global Research, and this is very important for all of you to take a look at, because this showcases the 24-month cumulative number in terms of the rate cuts that global central banks have conducted. So this data is available all the way from 2000, and what we can see is that in August 2010, so we had 313 rate cuts. So when you look at it from a 24-month cumulative perspective, and during the COVID also we observed 255 rate cuts. And September 2025, as of now, I mean, so we have this data till September 25, and you add one more rate cut over here, and you will be able to get a slightly higher number. Maybe now the point to note is that this we are very, very close to the GFC number in terms of the rate cuts. That is a very, very important metric to understand. Now the context here is that the past peaks were counter-cyclical. Central banks slashed the interest rates. So interest rate cut when rate cuts were observed primarily to stimulate growth after deep recessions, after a difficult period in the economy. But look at what is happening now. The current wave 24-25 is more of preemptive nature. So it is driven by the strong debt that has been accumulated and the fiscal stress. It is not because of an economic collapse. Now, some of the factors is that sticky inflation. So the current wave is preemptive, as we discussed. It is primarily on the back of the massive debt that most of the governments have been accumulating, and it is not on the back of an economic collapse. And the debt trap over here is that is keeping interest rates too low. Of course, it can be very beneficial for governments and businesses to borrow cheap, borrow more, and the downside of it is that it becomes very difficult to manage debt in the longer run. So the question that arises is that whether this debt is sustainable in the longer run, whether you can continue to depend and have faith in the current monetary system. So all these questions tend to arise as you continue to increase debt. So financial repression, of course, your the value of your currency continues to depreciate. I mean, when inflation is higher than the interest rates, I mean, the savers actually lose money. So the save your savings will buy less over a period of time. And the currency vulnerability, if people start to lose faith in the currency's value, of course it can result in massive outflow of currency from the country, and it can further weaken the currency. More importantly, the point to discuss over here is the potential formation of bubbles. And this is exactly what I started this discussion with right at the start, whether globally are people fearing an AI bubble of sorts. Is this going to be a repeat of the dot-com crisis? Now cheap money pushes the prices of stocks. When money is available at a very, very cheap rate, now what happens is it tends to flow into stocks. It pushes the prices of stocks, real estate, and all other asset classes, creating bubbles that can burst, potentially burst sooner or later. Now, focus on this chart. This is the game changer. Now, the thing is that combine all these points, so whatever we've discussed so far, and take a look at this chart. This is 30 years of central bank buying in terms of the gold demand, right? So this period is from 1992. This is from Visual Capitalist, by the way. 1992 onwards till 2008, what you can see is central banks sold gold during the late 1990s amid generally good macroeconomic conditions and a prolonged dip in gold prices. And now just look at how the trend has completely flipped. We've discussed this, of course, at length, but I'm giving this chart so that it can add to the context that we've discussed earlier regarding the rate cut as well. So just take a look at this. Amidst all the discussions around, whether this debt is sustainable, whether you can continue to depend on this monetary, the current monetary context, just take a look at how the tables have turned in terms of central bank gold demand. So from 2010 onwards, this has spiked consistently, and it used to remain around this mark, 400 to 600 tons, right? But if you just take a look at this year itself, it has surpassed all levels. It is almost two times of what we've observed in the recent times, and that brings us to the most important question. And I'm not an economic expert, right? So I'm just a learner, just like majority of our followers. I try to pick some insights from the market, so I will leave it to you as a question whether you think that this is primarily because of uh, what could this be because of. I mean, so why are central banks buying? So what is your thesis out of this entire data point that we've shared today? So there's aggressive rate cuts, and central bank also buying crazy amount of demand coming in from central banks for gold. So what does this indicate? Are we going to see a monetary system reset of sorts in the near future? I don't know whether it will be in short term, medium term, long term. Right. So that is a question I would like to throw to you. Please do share your perspectives. If there is any interesting data point, do share it with us. We'd be happy to take a look at that as well. So, and that brings us to the end of today's daily bite. And also, if you found this insight and video relevant, of course, watch this video as well. And as always, please do subscribe to the channel, like, share this video with your friends and family. Thank you so much for joining in. I'll see you in another video. In fact, Alok will be back for the next daily bite on Thursday, tomorrow being a market holiday. Thank you. Bye bye.